Hello, everybody. Welcome back. Welcome back. Welcome back. Welcome back to another video. Hope you're all doing well. Hope you're all doing great. Hope you're all doing absolutely fantastic. And that you're all having a great day. Don't forget to leave a like. It helps out the channel a lot. A lot of people don't realize it. The channel works on an algorithm. The more people like it, the more people interact with it, the better the channel actually does. And without any further ado, let's jump right into it. I know we're in a really weird spot, and I'm not going to pretend that we're not. The last couple of months in general for the cryptocurrency market and for the world's economy in general have been really intense, and we can't pretend that it hasn't been in some sort of way. When I bring you a lot of the news or when we talk about a lot of things, I know a lot of times it seems hypey or like I'm being too overly optimistic or whatever the actual case might be. I do see the comments, I do see people talking, and a lot of times, especially on days where prices are going down, if the news ends up being somewhat optimistic, I see people being a little bit disillusioned because it doesn't make a lot of sense to them. That's why I keep saying whenever we have a lot of news about adoption or companies or institutions buying Bitcoin, and then on that day we see prices go down, that's not indicative of what's actually happening. They've just figured out a way to use smoke and mirrors to basically deflect and not have people really understand what's going on. A lot of the movements that we've seen recently in the stock market, especially around a week ago, give or so around that time, have actually been quite interesting in that for the better part of 4 years, for some reason, we have been closely associated with and tied to the stock market. A lot of people believe this is because we have new institutions coming into the space, and these people from traditional finance basically will treat cryptocurrencies or Bitcoin similar to a stock. We've had that conversation a multitude of times, where if Bitcoin moves down, it appears that investors are treating Bitcoin similar to a tech stock or something techy, and therefore if they go down, then Bitcoin goes down, then crypto goes down as well. The really interesting and fascinating part, if I can say that, is that many of you might have noticed, but people on Twitter definitely noticed as well. As the stock market in the beginning was like tumbling down, you know, we were talking about down 10 to 15%. If you didn't see, because of the tariffs, many stocks, the gains that they had gained over the course of a year were completely wiped out in 2 days. Not 2 months, not 2 years. In 2 days, the gains from a year were completely gone. This didn't happen to crypto. A lot of altcoins fell, you saw, by 7%, 3%. Some fell by 14%. But the larger fallers were usually garbage coins, which we're not going to get into. If you noticed, Bitcoin over those same days, that period, fell by around 2%, and one day it fell by 4%. We were rocking around, I think, $74,000, $76,000, something or other like that. If we had followed the exact trajectory of the stock market, Bitcoin would have fallen back down to $15,000 per coin. Now, from that point on, we've always been talking about that analysts within crypto have been extremely optimistic about the cryptocurrency market. I did see, I think it was Kyung-ju, Ju, the guy on Twitter, and one other person who were actually posting rather bearish things because the market was falling in general. We should have, as we've gone over before, and we need to be honest with ourselves, we should have been a lot higher in price, but the same exact thing can be said about the US stock market and world stock markets in general. It's the tariffs and the uncertainty from the tariffs and all these other things that keep bringing prices down. I know that a lot of people don't want to admit that to themselves. And I've seen people on Twitter saying, no, it must be something else. It must be something from China. It must be, no, it's the tariffs. They're completely unnecessary, and unless you actually figure that out completely, you're not going to be able to move ahead and in mental states. I promise you that. So and I want to say silver lining in all of this is that Bitcoin did not fall back down to $15,000. We did not follow the exact trajectory of many tech stocks or the big seven or whatever they're calling them, and that was incredibly bullish. So a number of analysts, even those who were lightly bearish, there are a lot of analysts, if we can talk openly, who think now, because of the tariffs, or until the tariffs are completely gone and done with, and there's no longer any discussion of additional taxation on this country or within products within the United States of America, that then the cryptocurrency market will go back up. However, because we did not slide the same exact way that stocks did, a lot of people think that something big might actually be coming to the cryptocurrency market price-wise, like a good movement up, because we basically didn't fall. It says Bitcoin has shown remarkable resilience in the face of increasing global market instability, triggered by renewed tariff tensions, and could be on the verge of a major breakout. This is according to Bitwise CEO Matt Haugen. This sounds insane, and this was happening a couple of days ago as well. What's this guy's name? Arthur Hayes. And there were two other people. It wasn't Michael Saylor, but there was another person. They were openly discussing if Bitcoin fell or continued to fall around a certain level, we'd basically be in trouble. The fact that and I dare say, at the height or the announcement of the tariffs, that we didn't immediately fall back to a $40,000 Bitcoin was incredibly optimistic for us. It shows that the people who wanted to sell have sold. You might have some other people who get shaken out and then we fall by $2,000 or $3,000. But if you also look at the price from a couple of days ago when all this announcement was going on, the price a couple of hours actually spiked the next day because a lot of people were either rebuying and or the institutions were continuing to buy. So the buy orders were actually taking over the sell orders. This is not the first person, CEO, rich person in the last couple of days who's calling for higher prices in the cryptocurrency market. We also have an abundant amount of speculation as to when the tariffs are going to end completely, like I said. People don't think that they're going to hold. A lot of people think that this is, first of all, this is obviously some kind of a power play by the United States to try and get better trade deals, what have you. But this also will not last for a year. A lot of the expectation, once again, is that even by the end of April, there will be no more talks of tariffs. A lot of discussions and deals will have been made. And then the piece de resistance that everyone is continuously waiting for is basically the Fed to announce that multiple times this year they're going to be lowering interest rates. No one knows if that's going to happen, but the fact that we didn't buckle under a lot of that pressure, people are still calling for a $100,000 Bitcoin, and then subsequently the numbers that we're seeing now are $250,000 to $300,000 sometime over the course of this year. Speaking in a recent interview, Haugen noted Bitcoin's relative stability compared to the broader stock market, which has been rocked by President Trump's recent tariffs on U.S. trading partners. He said, Bitcoin bulls should be inspired by this performance. It's poised to rise significantly if we experience a period of stability in the broader stock market. People think it'll happen within the next couple of weeks. This is very similar to C19 back in 2020, if you remember. And I say it this way, and I say this for FTX and everything. There's only so much fear that the human mind or any market can actually take. It's similar to a number of other world events, two of them in particular taking place When they were announced, stock markets and the crypto market fell as well. But after a couple of weeks, the mind literally can't hold all that negativity anymore. And there usually is always an upside period. So if we can actually get through all the news about the stock market, any potential tariffs or anything else crazy or terrible or whatever that might happen, and we see that stocks begin to recover, the cryptocurrency market is going to boom after that. Halligan drew a sharp contrast to previous periods of economic stress, particularly C19's crash of 2020. If you've forgotten this, don't forget this. When Bitcoin, for those of you who don't remember, Bitcoin fell below $5,000 in 2020. That's why a lot of times when people tell you to look at the long-term picture or the broader picture, is that we had a situation where Bitcoin went from $20,000 to $3,000 when we had Bitcoin Cash, Satoshi's Vision being launched in 2018 or 2019. We began to recover and then fell below $5,000. So even if you look from a mathematical standpoint of what most assets do on any given year, rising by 3, 4, 5, 6, 7%, us going from $5,000 to $109,000 in a 5-year period is absolutely incredible. But of course, everyone wants a little bit more than that. He said it's a different asset. There's a broader distribution of institutional ownership now. And I think what this tells you is that once this market volatility levels out, we're going to see a return to all-time highs and beyond. I know it's difficult. And this is why a lot of times we have these talks and discussions, because I know that people need to hear them. If you are new to the market, I saw some people in the comment section and also on Twitter saying that this was their first cycle. Hello to you. This is what it's like. This is what it's been like every single cycle, irrespective of what event might actually be happening. It's always the same. There's always some kind of a euphoria and then a crash. Euphoria, then a crash. It's always the same. It's the same exact thing in 2016. The market was miserable. Not bad. I mean, it was completely on the ground miserable. People never thought the market was ever going to move again. We began to move up in the beginning of 2017, around spring or something like that. There was another fall, a really weird crash in price. Everyone was over it. By the time we got to the end of the year, the only news that people remember is that we hit a brand new all-time high of $20,000 and people made so much money. That's all that sticks in the mind. You miss the years before that we were it was agony every single day, not seeing the market move or continuously seeing prices go lower. At the end of 2017 until the beginning of 2020, we were in a bear market. Everything was terrible. Prices were going down. We kept on hearing that institutions were coming in. We had news daily from Coinbase, Binance, Kraken, Gemini. The institutions are here. We're building custody solutions. Big money's rolling in. I remember one day there was an article from the guy from Coinbase, Brian Armstrong. And he was like, yeah, we're in contact with a number of companies and these are multi-billion-dollar companies. And I remember sucking my teeth and I was like, you don't have to lie to us, dude. These companies aren't actually there. We entered 2020, the same as when we entered 2025. And we were expecting prices to do really well. Lo and behold, everything collapses. We fall back down to $5,000. We're sitting there waiting for some kind of information. Remember when we got the stimulus checks? People were like, please let this raise Bitcoin to $100,000. Prices kept on falling. Enter 2021. We get some kind of market momentum. Prices go up and slam back down. We heard that people had to stay home. This was happening in China. So it's always, this is every cycle. I know it's painful. I know it's awful, but the way that my friends usually conceptualize all of this is that, and it sounds cheesy, but this is where the big money is actually made. When everyone is flushed out of the market, when everyone's terrified, when everyone's scared, That's usually the point when if you enter the market, you make the most gains. Because if we get to December of this year and we see that Bitcoin's at $344,000, you are only going to remember the good point of the market. And you will subsequently forget how painful it actually was to be in the market. I said it before, I'll say it again. I recently said it on Twitter. I think things are going to get better on from here. I don't know what the future holds. I can't give you an exact date for anything. But I think that, as I said, by the time we get to summer, it seems realistic that a lot of these power plays and stuff like that will have smoothed over. People will stop overreacting about a lot of stuff. And by then, we probably will get some kind of an indication that the Fed is going to lower interest rates. I think 2 countries recently did it. India lowered theirs by 1/4 point, and the Fed at some point will do the exact same. I mean in relative optimistic terms, we're still at the beginning of the year. That's why I said before, if we get to the end of summer and we have a $55,000 Bitcoin, it's time to panic. But a lot of analysts believe this is, will not take place for a long time. We will get past it, and everything will basically rise from there. It is very bullish that we did not, because we easily could have. Remember, everyone was calling, for those of you who forgot last week, people were calling for Black Monday. People were saying this was going to be the beginning of another Great Depression. So as long as we can hold on and we don't go down as much as the stock market, things are looking pretty good for us. Yeah, believe me, I know it's difficult. If you've been here for a couple of cycles, you're used to this. It's not the greatest to see prices go down, but there's a kind of like a blasé thing that kind of falls into it. I'm still buying. I'm buying all the time. It's just what I do. I have a number of automatic buy orders, so I, set it and forget it as it kind of were. But yeah, we'll see what happens. That's the things don't look as bad as people are making them out to be. And yeah, let's move on. Oh, also, this was part of it as well. Completely forgot. I wanted to show it as another thing. For those, it's meant to tie in together. For those of you who missed it at some point in one of the other videos, Larry Fink, the CEO of BlackRock, announced basically if the U.S., this was days ago, if the U.S. doesn't get its debt under control and all this tariff nonsense keeps going on and all the money printing, he basically said, yeah, the Bitcoin is probably going to take over the U.S. dollar in the next couple of years. And it's something that I need people to really pay attention to because, once again, this is where the rich people are actually paying attention. Larry Fink has said crazy stuff before about Bitcoin. And it typically happens right before Bitcoin's price goes up. Remember when he was telling all the people who work with them and all their clients, talking about 60, 70, 80% of their portfolio should be in Bitcoin? You know when he said that? When Bitcoin was at $15,000. Yeah, I know, it's kind of crazy. Yeah, just wanted to make sure everyone saw that one as well because it ties directly into it. Also in the news, a company by the name of Dominari Holdings has launched something called a Dominari Bitcoin Treasury Strategy, allocating a portion of their cash reserves into Bitcoin. The company will invest part of its excess cash and earnings into BlackRock's iShares Bitcoin Trust ETF, currently the world's largest Bitcoin ETF and will probably always remain so in some form or capacity. The company has already invested $2 million into Bitcoin in this initiative and plans to increase its holding as cash revenues grow. The company has plans to continue this practice as the company's cash reserves continue. That's a weird, okay, cool. That's basically the exact same thing all over again. Cool, this is another company. We typically get 3 per week, give or take. This is another one. Dominari Holdings has announced they're going to also create a Bitcoin treasury as well. We're kind of used to this. I assume over at this point we have hundreds of companies who are doing this, and this is something to never ever forget. They don't care if prices are low or if prices are high. These companies are always buying. This is part of the literal strategy. If they're going to continue printing dollars, euros, and yens, basically they're going to continue buying up more Bitcoin, or basically having the money to do so. Another company, Darmanari Holdings, is going to be buying up Bitcoin as well. Just makes a lot of sense. This was also very, and I mean, no. This was very unpopular news. And I sat there for a while trying to understand why. And then I think I got it, but I'll tell you afterwards. European regulators have proposed tough new capital requirements for insurers holding cryptocurrencies, signaling the European Union's toughest stance yet on Bitcoin and other digital assets. I wonder sometimes if other people who either write these articles or a lot of people in crypto also exist in reality. And I ask because I believe that I do. It's similar to if you weren't here back in 2018, 2019, there was a gigantic call not only from the SEC and the CFTC, but other countries to regulate cryptocurrencies. The idea being they didn't want something else like BitConnect to happen, or any of the other ICOs that were, popping up and taking billions of dollars and yada, yada, yada. And regulations to me sounded perfectly fine. I told you all, as long as we weren't hearing these people say, let's ban it, or let's restrict it, or you can't do this, or you can't move Bitcoin in your own, I gave a thumbs up. It makes cool. I don't mind regulations as long as they make sense and also protect the consumer. That's usually the point of regulations. However, a lot of people had a lot of problems with it. They thought that crypto should be a complete free-for-all. And when things like that happen, you get the meme coin mania and people lose tons of money. So this news popped up, and I've been seeing for years, and I don't know why. A lot of people, especially on Twitter, continue to write articles or they post stuff or follow this link. And they talk about how unfair the EU is, or how bad crypto is in Europe, and how awful this. For those of you who don't know, I think 2 countries or 3, but I'm going to say 2 countries within the United States have a 0% tax on crypto. That is 0, not 1%, not 10%, not 15. It is 0. And all these other countries also had Bitcoin ETFs and stuff before the United States. That's what happens when you have actual regulations, and they have far more consumer protection. So when you hear what these new capital requirements are for countries within the European Union, you're going to go, oh no, that actually makes a lot of sense. The European Insurance and Occupational Pensions Authority, or EIOPA, okay, has recommended to the European Commission that insurers impose a 100% capital requirement on all crypto assets. Does anyone understand why? The move aims to discourage insurers from investing in digital assets. That is completely incorrect, as the U.S. has taken steps to loosen restrictions on crypto assets for traditional financial institutions. Just because the U.S. does it doesn't mean that it's good or that it's perfect. Currently, most EU insurers allocate capital equal to 60 to 80% of crypto assets. But the proposed rule would mandate full coverage and significantly increase the cost of holding digital assets. Do you understand why? I'm honestly asking because I'm pretty sure someone heard that and you're furious, you've crossed your arms and you don't really get it. Do you remember when FTX collapsed? When BitConnect collapsed and all these other countries, all these other companies were failing and falling apart, and we had the whole situation where people were like, I want my money back. And the company was like, oh, we only have 20% of your money. This law is basically making sure that if any cryptocurrency company, any insurer for any, whatever it might be within the European Union, if you are holding my crypto, you are required to hold an equal dollar, euro in this sense, amount of my money. So that in the case of fraud, in the case of a company collapse, everyone working with that company gets their money back. Yes, yeah, right. See, you understand what I'm saying now. No, this makes complete sense. Remember the olden days when all the crypto exchanges were talking about proof of funds? Yeah, when FTX collapsed, every crypto exchange was like, every month we're going to show everyone out there that we have the money to be able to prove that in the case of this crypto exchange going down, we can handle it and give everyone their money back. If you just missed a week ago, FTX, the people who are owed by FTX, FTX has, I think, 110% of the money. So people will be receiving extra more money than they should have. That's exactly how it should work. The idea of a 60 or an 80% allocation is nonsense. If you completely collapse, I don't want 60% of my money. I want 100% of my money that you were holding. I gave you $100. I didn't give you $60. So yeah, this also made very unpopular news, and a lot of articles were like, it's not fair. This will hamper crypto innovation. And it's like, no. As a company, if you are going to announce that you are going to hold someone's money, you are going to insure something, you are going to do something for your investors, if you lie to us and you disappear to the Cayman Islands, I want to make sure that you have the money, that someone is going to pay all of us back. So this is actually great news because that's how it should be. It should be this way everywhere. It shouldn't be 10%. This is the problem with banks. Do you know why? Do you remember 2008, 2009? I'm sure you do. Remember all those videos online and on the news? You were watching it, or maybe some of you were there when people were going to the bank and trying to get their money out of it. And there were all these gentlemen standing outside with large metal objects in their hands, telling people, no, you could not have access to your own money. Do you know why? Because banks are not required to hold all the money that they say that they have. So all the money that you give the bank, what people don't know is that the bank instantaneously uses your money to trade in the markets. People don't know this. Like how a bank will say, hey, at the end of the year, we'll give you 1.5% back on your money. Did you think that the bank was just like being generous? No, the bank is using your money to make money. They pool it all together and they use your capital in the markets. And when they make 300, 400, 500% over the course of a year from trading in the markets, they go, here you go, and they hand you back a penny. That's how it works. So the banks are never required to actually have all of your money. So when people go and have a bank run, the idea is that they don't have all that money. They're lying. They literally are lying, but we've been told and taught to trust banks, even though they continuously lie to us. That's the point of a bank run, and banks don't hold all that money. Yeah, interesting times ahead. I'm very glad that we have something like this because it just makes a lot of sense. Right. Hope everyone's doing okay. I know that actually, hold on. No, okay, sorry. Okay. Video has to end. Sorry. It's the door. Hold on.